Welcome back. Aerospace and defense company L3Harris Technologies rising up about 2% right now after posting better than expected quarterly results. Joining us now in a CNBC exclusive is L3Harris Chairman and CEO Bill Brown. Bill, thanks for being with us today.
Good morning. Thank you for having me.
So as we mentioned, a beat today, but you did also lower 2020 guidance due primarily to COVID-19 impact on commercial aerospace at a time where there is so much focus on aviation and the downturn we're seeing within that industry right now. What is factored into your forecast?
So let me start by just thanking all of the men and women of L3Harris Corporation for just a tremendous job here in the first quarter. You mentioned about the solid results. You had a great start to the year with revenue up 5%. Operating income up 17%, earnings per share up 21%, good cash flow, orders were good, our backlog came up. So it was a very good start to the year, despite the environment we happen to be in. So you're right, we've trimmed the outlook for the year. We were anticipating 5 to 7% growth for the year. Now it's 3 to 5, so midpoint 4%. That delta really is the exposure we have in the commercial aerospace, where we've taken our number down by about 40% in the year. It's not a big part of the overall portfolio, less than 3%, but it does have an impact. It did reduce our forecast and our outlook for the balance of the year.
Yeah, and of course, defense, which is the majority of your business, has been so resilient. You are one of the top 10 defense contractors in the world, a backlog that's been growing. You maintained your cash target as well. What has that process of working with the DoD looked like in the midst of this pandemic? And I guess when companies like Lockheed Martin are coming out and warning that the longer this pandemic stretches on, the more risk there is to supply chain disruption, are you seeing the same thing?
So look, 75% of our business is tied to the Department of Defense, and that business is up 8% this year. So it is strong. We've been working very, very closely with DoD leaders, all the service leaders, to do our best to try to accelerate contract awards, DoD to us and us onto the supply chain. It's something we're very well focused on. We have 10,000 suppliers in this company, about half are small suppliers, many of which are single or sole source, and many of those have exposure to commercial aerospace. So we are working very hard to support those small suppliers. We've accelerated more than $100 million of advanced payments into our supply base. Some of that's coming from the Department of Defense. We're doing all we can to make sure that that important supply chain is protected, because right now, you're right, it is vulnerable.
Yeah, and you're 9 months, of course, into a merger as well. Earlier this year, you said you were looking to shed as much as 10% of the portfolio. Is that still the plan? Are there currently buyers in this market right now?
It's a good question. So we're about 10 months into the merger. Integration is going very well. Cost synergies are tracking well. In fact, we're accelerating, and that helped us offset some of the downturn we're seeing this year from commercial aerospace. We're seeing revenue opportunities show up as well, so that's quite good. So we've been looking at the portfolio now for the last 18 months since we signed the agreement, looking very carefully at the businesses that we want to be in longer term. We want to be in businesses where technology differentiates, we earn good returns, we can grow, we can win. We just closed on the transaction yesterday for $1 billion, selling our airport security and detection systems business. So we're about 1/3 of the way through our target of getting to 10%. We've got more that are in flight. We have 2 that'll close later this quarter. There's going to be some friction. Some of those deals will move to the right a little bit. But longer term, we think taking a hard look at our portfolio is the right thing to do, even in this environment.
Yeah, you mentioned the airport security and automation business that was sold to Leidos officially last night. I'm curious, though, even though you've now officially exited that business, what you think the future of air travel is going to look like from a security standpoint.
It's a very good question. I think it's going to change in some ways. There may be different ways of monitoring passengers as they're coming through checkpoints. I know it's something that we were looking very carefully at, and I'm sure Leidos will take a hard look at as well. There may be different ways of biometrics, temperature screenings that obviously will become more important in a post-COVID environment, something that I'm sure that team is going to be looking at.
Hi, Bill. Good morning. Thanks for being with us. It's John Fort. I have noted that you expected to have around 50,000 employees as a merged entity. So just kind of checking in with that, given everything that's been happening in the workforce amid this crisis, is that still the level where you are, Where do you expect to be in the coming months as the year ends? Are you hiring in certain areas? Are you laying off in certain areas?
So, John, thanks for the question. We do have about 50,000 employees, all working hard, mostly in the U.S. Terrific group of people. Large proportion of them are technologists or scientists or engineers or the variety of technology trained people. We're hiring. We've hired 2,500 people year to date. We'll hire 6,000 this year. We have about 1,400 open requisitions as we speak. We're bringing on more than 800 new college grads and more than 700 summer interns. So yes, we're hiring. We are growing and we're hiring.
Wow, that's definitely something to take note of. And of course, as a defense contractor, you are an essential business, so you continue to have your production lines going through all of this. I'm curious longer term, though. We've got this U.S. deficit that's ballooning in the midst of all of these aid and stimulus packages right now. Already in D.C., this debate emerging around where future budget cuts are going to happen. What is your longer term outlook for defense spending?
So this year is actually quite good. Obviously, they're accelerating investments. The budget for 20 is up 3% from last year. And you may know over the last couple of years, the DoD budget has come up quite a bit. So going into 21, it's expected to be about flat. That was the president's budget, and then grow 2% beyond that. That obviously was a pre-COVID forecast put together by the president. You know, I think next year will be okay. Even beyond that, in 22, it'll still be okay. There's $135 billion worth of unspent money, investment account money, that will continue to drive some growth in the space. But beyond that, look, I think the threats in the world remain. You can see what North Korea is doing, the Iranians, the Chinese, the Russians. And I think our Department of Defense is focused on national security. And I do believe there's bipartisan view that national security is critical. So I'm optimistic that there'll continue to be strong defense funding beyond the next couple of years.
All right, Bill Brown, thank you for joining us today, the Chairman and CEO of L3 Harris Technology.